Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and Reema Tendulkar will be joining me in just a bit. Until then, let me run you through all the headlines that we are tracking at this hour. Nifty and Sensex edge higher as stocks rebound on relief over no hawkish surprises from the RBI. Financials, metals and realty lead the recovery while IT and FMCG drag. The Reserve Bank of India hiked the repo rate by an expected 50 basis points, kept its stance unchanged and retained its inflation guidance for the year. This even as it trimmed its FY23 growth forecast to 7% from 7.2%. RBI Governor Shaktikanta Das likened the global monetary tightening to a third storm after COVID and the Ukraine war. He also refused to set an outer limit for rate hikes while saying future actions will be data-driven. The Competition Commission puts off a decision on the proposed Zee-Sony deal. Sources tell CNBC-TV18 the regulator has called for written submission of information by the two parties. Okay, the top headlines at this hour. Markets, they continue to surge higher. The Nifty is sitting with gains of 1.7%. And the markets have given a thumbs up to the RBI policy action. It is in line with expectations. So that's something that is bringing in a relief rally. So markets at the day's high, we have Bank Nifty, which is pushing the markets higher, with the PSU banking index up 3% as we speak, and the private banking index up 2.5%. The mid-cap side of things, in a market like this, we can say that they are underperforming the benchmarks with gains of 1.3%. All over, there is green on the screen, and we have seen that the new series, that is the October series, has started on a positive note. As I said, mid-cap index also in focus today. So in our segment, Mid-Cap Movers, we have Vivek to take us through the mid-caps that are moving around in trade. Vivek.
Well, that's right. In fact, if you're talking about the mid-cap end of the market, as you rightly said, there are some stocks, that are in focus today, seen very, very sharp moves. First on the list, a very interesting stock, Heritage Foods. Now, what's actually happened here is that the company has announced a rights issue. And very interestingly, the rights issue is priced at the face value, clearly leading to quite a bit of optimism as far as the stock is concerned. Other one, of course, is India Cements. Now, the entire cements pack has been abuzz, especially in the previous series. Now, today, again, India Cements, on the back of the fact that a lot of larger players now have deep pockets, and which is why, some of the mid-cap and the small-cap guys are looking like acquisition targets, or especially certain aspects of their businesses are being looked at as acquisition targets. Also looking at Adani Green, today the stock has made a very, very sharp comeback. Remember, yesterday there were worries that Total SE, the French company, would be looking to pay a stake after clarification that they may only be looking to trim a partial stake, and also on the back of the fact that the company today has commissioned a very large project. It's back in the green and trading with very high volumes. Tex Macro Infra, another stock that's surging on very good volumes. The other two stocks, Gujarat Fluor and Inox Wind, on the back of the fact that towards the end of next month, expecting the IPO of Inox Green Energy, both of these stocks too are perking up in the session. On the other hand, if you're looking at some of the gas stocks, look at IGL, MGL and Gujarat Gas. Now, remember today is September 30th, so today is the expected date of the revision as far as the APM calculated gas prices are concerned. Clarity is yet to be awaited, but in the run-up to that particular event, you're seeing quite a bit of a sell-off as far as the gas stocks are concerned. Lastly, Gujarat Pipavav, now today falling on very high volumes and quite a bit of laggard as far as the trading session is concerned.
Vivek, thank you very much for that. What a phenomenal recovery on our hands right now. We've been closing in the red for the last 6 or 7 trading sessions. Today, there is the rebound taking place. Who would have thought just yesterday the Nifty closed at 16,800 and right now we're above 17,100. Hemain Kapadia of KR Choksi Securities is also joining in for a technical check on the markets. Hemain, are you surprised by the ferocity of the rebound and what would be the key levels to watch from here on?
Hi, Reema. Very good afternoon. Thank you for having me. Not entirely. I think we spoke last week, Reema, and we spoke about 16.8 and 16.8 came. 2-3 things. We were deeply oversold. We were at medium-term support levels, both the Nifty and the Bank Nifty, and a whole bunch of stocks, Reema. Whether you look at Reliance, you look at some of the banks, HDFC Bank, so many stocks which were down for 5 to 7 trading sessions in a row were at not only short, medium-term supports, oversold. So frankly speaking, we were looking for a rebound. Yes, I think the Bank Nifty is high beta, so it led a more stronger report. But no, I think normally bear market, I wouldn't say bear market, but these bounce back rallies are ferocious and stronger than a usual normal uptrending market.
Okay, and what would your individual technical picks be, Himain?
Yeah, whole bunch of stocks, but once again, it's still too early to say we're out of the woods. Everything is fine in terms of a recovery. I'm not sure we can term this a rally as yet, but yeah. Firstly, a buy call on Balkrishna Industries. Sonal, oversold, positive divergence, crossover, buy by the mechanical indicator, upward key reversal coming in. So buy at around 1880, stop loss 1840, target of 1940. Secondly, a buy call on HCL Tech. Though IT has been lagging, I still feel that IT is going to play catch up anytime. So a buy on HCL Tech at around 925, a stop loss 910, target of 955. Lastly, a buy call on Granules. I mean, this looks very interesting. A 1.5-year correction, daily, weekly, monthly charts. Everything is positive. It's breaking out on a medium to long-term chart. So looks very attractive in a market which is still, I believe, a bit wobbly from a medium-term point of view. So a buy on Granules at 340. Stop loss 325, target 370. It's a very modest target from a trading point of view. I believe the stock would go up by at least another 100, if not 200 rupees over the next few months. So,
Very much, Himain, for joining in. The day belongs to the interest sensitive. So the Nifty Bank is up 2.5%. The Nifty Real Estate Index has gained 2.2%. So when we return, we'll be joined by the management of Max Ventures, a real estate company, to discuss the business outlook and the impact of the increase in interest rates. Welcome back. Now, as we know, the RBI has raised rates by 50 basis points today. This is the fourth straight hike undertaken by the Reserve Bank of India to rein in inflation. On our radar today is Max Ventures. We're joined by the MD and CEO, Sahil Vachani, to discuss the impact of the latest rate hike on the real estate sector, the demand, if it's going to get impacted. Sahil, afternoon, and thanks so much for joining in. Another rate hike. Do you see, the high interest rates impacting demand?
Thank you. Good afternoon. Thank you for having me. So I think Max Ventures is in two verticals: commercial real estate and residential real estate. On the first, commercial real estate, we do not see a significant dip in office demand as a result of the rate hike. We believe that the return to office has happened, and there is a huge mismatch between the supply and demand of office space. We are seeing this year in 2022 demand of office space back to pre-pandemic level of 2019 and anticipated to grow moving forward. On the residential side, absolutely, I think there is anticipated to be some impact of demand at a macro level for housing, because the cost of borrowing obviously will increase. Having said that, we still do believe that for us at Max Estates, given that we are just starting our journey, our aspiration to do a relatively modest volume of 1.5 million square feet a year, we do not anticipate a negative impact to Max Estates and Max Ventures per se. But at a macro level, yes, obviously this will reduce the affordability in that sense.
Okay. So, Sahil, good afternoon. You said 1.5 million square feet of volumes in the residential segment on a yearly basis is what you're targeting. What does it do to your realizations? Since you're talking about how affordability at a macro level will be impacted, do you think it will impact pricing as well in the sector and for your company in particular?
Not really. We do not see an impact on pricing, although we are on the opposite side, though we are seeing an upward trend both in the real estate prices and pricing. There has been a reduction overall in the unsold inventory, and we are coming to a low period of the unsold inventory, so as to speak. So we feel that with the commodity price pressures that had increased, there will be some pass on that to the customer, and also the overall real estate sentiment remaining extremely positive and bullish. we do not see pricing coming under pressure. And more so for Max Estates, given that we are in the price point of in the range of 12,000 to 17,000 rupees a square foot, we do not see significant price pressures at this range.
Okay. Just wanted to get an update. You sold your packaging films business. Have you received the entire amount of 660 crore or is anything pending?
So we've received about 550 crores of the 650 crores. The remaining 100 crores or 120 odd crores is committed to be received by June 2023.
Okay. So what are the plans with the money that you've received? Of course, your focus now is completely on real estate. You have made some acquisition in terms of land parcels at Noida Expressway. There are some more projects in the pipeline. Will this money go into that? What is the pipeline looking like for the rest of the year?
Yes, so the intent is for all the capital to be deployed across two asset classes, which is commercial real estate and residential real estate in the National Capital Region. So we have already announced two opportunities in Noida, one for 1 million square feet of a residential development and one for a 1.2 million square feet of an office development. In addition, we have also recently announced an acquisition of a 7-acre land parcel that entails a possible potential development of 1.6 million square feet in Gurgaon. And we are on the lookout of, in the near future, hoping to close a residential opportunity in Gurgaon as well. So as we step back and look at it, it is approximately going to be a footprint of 7 million square feet across office and residential in Noida and Gurgaon. We are currently at about 2 million square feet in total. So this will be a significant jump. And we are confident that this will enable us to emerge as the top few leading real estate developers in the National Capital Region. Also delighted to share that a few days ago, we have announced in our office venture, New York Life's co-investment together with Max Estates for the office project in Noida, which is going to be 1.2 million square feet. And therefore, the combination of the proceeds from the packaging business and also the continued co-investment from New York Life from an equity perspective has enabled us to continue to grow the real estate business, acquire a scale of 7 million square feet of under development and a total scale of close to 10 million square feet in a very conservative financial manner as a result of not only the exit of the packaging business, but also New York Life's co-investment.
So 7 million is currently under construction, right?
Yes, we have now.
So what is this 10 million square feet?
So we already have 2 million square feet that is developed and leased, and 7 million square feet is what we have signed up across the three opportunities in residential and commercial across Noida and Gurgaon.
So that makes it 9, right?
Yes, and we are hoping that we will add to that something in Gurgaon, which is a residential development as well in the coming few months. So that will hopefully take us to a sizable portfolio, as I mentioned.
So the Gurgaon announcement should happen in FY23, which will enable you to develop another 1 million square feet.
That's correct.
Okay, and that's again a same split between residential or commercial, or?
So we are looking for a residential opportunity. We have recently announced a commercial opportunity in Gurgaon. So there will be a residential and commercial project in Noida and a residential and commercial project in Gurgaon as well that we hope to close soon.
Okay. So by when do you think the merger that is announced between Max Estates and Max Ventures be completed?
So we have received the first set of approvals from SEBI, and we are confident that by March 23, through the NCLT process, we will be able to complete the merger, and Max Estates therefore can become the directly listed company for our real estate business.
I just had a follow-up. You are saying 10 million square feet of portfolio. Can you split it up for us, say in residential and in commercial terms, so that just a ballpark figure in terms of what kind of bookings you're looking at? Because you said your average realization is between 12,000 to 16,000 per square feet.
So we are the split for the 10 million. So the split for the 10 million is going to be approximately 6.5 million for office space and 3.5 million for residential in total.
Okay. All right. So last question before we let you go. I just wanted to check what would your lease rentals look like, say, 4 to 5 years down the line with this new, new portfolio coming in. In FY22, the rental income was around 37 crore rupees. How much can you add on to this one?
So just as an illustration, we started leasing at Max Towers at 95 rupees a square foot in 2019. And through COVID, not only have we been able to get 100% occupancy, but our last closed rental is 130 rupees a square foot. So we're very confident of a significant re-rating as most of the leases, come to expiry over the next 5 to 6 years or so. So there is significant uplift that's available here. Our second development, Max House, is also 100% leased. And again, we've almost touched 140, 145 rupees a square foot with the last lease that we've signed there. So we're very confident of significant uplift in terms of our rental realizations moving forward, and also 2 new developments which are anticipated to get completed in the next 6 to 9 months. One is Max Square, and the second is the second phase of Max House Okhla, also come to market in the coming financial year. So we're very confident that we will anticipate an increase in the rental realizations for the company, and hopefully we will be able to launch our first residential project as well. So the sales collections for that are also anticipated in the coming financial year.
All right. Good luck with all your plans, Sahil. Thank you so much for joining us and giving us all those details. So big expansion plans in place for Max Ventures. They are looking at a portfolio of 10 million square feet, largely towards commercial, 6.5 there, and the rest 3.5 towards residential real estate. With that, we'll slip into a short break now. But before we do that, here's some great news for investors. You can now track US market action real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets. Welcome back. You're still tuned into Midcap Radar, and what a move on the markets. The Nifty is now sitting with gains of 314 points at the day's high. There's no stopping the bulls today, and Bank Nifty is really leading the rally. So that one is up 1,000 points as we speak, almost 1,100 on that one. And the mid-cap side of things, so there's some more buying in the mid-cap index. 3:1 is the ratio as far as the advanced decline is concerned. And all across the board, there is some green on the screen. So this takes us to our special segment, Mid-Cap Spotlight. Rima, you're focusing on Tejas Networks today. What happened here?
Well, it's a fresh 52-week high on the stock. It's up 63% so far this year. Earlier, there were news reports. It was reported in Economic Times that TCS and Tejas Networks will be driving 4G services for BSNL, and this was going to be a very large $2 billion deal. That's 16,000 crore rupees. And Tejas Networks will be providing the telecom equipment for BSNL's 4G foray. So that's one set of news. Separately, on the Bombay Stock Exchange, there was another news that Sankhya Labs, which is, helped the company expand its semiconductor 5G equipment foray. The Tejas Networks had about a 64% stake in Sankhya Labs. That they have increased to 100%, and with that, it now gets merged. Sankhya Labs, which, where the company had a 64% stake, will now be 100%, and it gets merged in Tejas Networks. So commensurate, there will be that increase in the profitability as well once the minority interest is taken out. But what's interesting is that the Q1 numbers were very weak for the company. They reported a loss of 6.3 crore. At the EBITDA level as well, there was a loss. And after the weak Q1 numbers, the stock is up 43%. Okay, so we were just trying to understand, that what could be driving that after a week said where at the EBITDA level you make a the decline, there is a loss. What's driving this 43% up move? One, the cash in the books is nearly 1,739 crores. This is after the Tata Group's invested money in, Tejas Networks. So 1,739 is the cash in the books. The company said that even after a Q1, they're confident about significant growth this year versus the last year. And in the conference call, they also said that there were the words used were a few large multi-100 crore tenders, which were expected to close in Q1 but have gotten pushed forward to Q2 because of some date signing issues. So it just got spilled into Q2, which basically means Q2 should be a pretty good quarter in terms of order wins. And then it's a Tata Group company, and that in itself adds its premium because the Tata Group holds about a 51% stake in Tejas Networks, and the company said that they plan to use the Tata ecosystem to get into the international markets by expanding into new geographies and getting new accounts as well. So they are planning to leverage on the Tata Group ecosystem. And finally, tomorrow Prime Minister Modi will be unveiling 5G. And Tejas Networks can be a direct play on 5G because a lot of their products that they have will cater to 5G. So as the capex picks up across the board from operators and other solution providers, Tejas Networks will be a beneficiary. So there is that sentiment boost as well, which is coming through ahead of the announcement.
So that explains the 42% move after a week set of numbers. Reema, thank you so much for making sense of what's happening in this particular counter. Is at a 52-week high today as well. And with that, we'll take your leave on this edition of Midcap Radar, your stocks when we return.